I often get asked as a financial advisor, what should I invest in to get me the best returns? It's probably the most common question. Usually the prospective client already has something in mind, usually property. Property is the most common assets Kiwis invest in, and so everyone who owns property loves to share how well they have done. Or they have spoken to their uncle or a self-proclaimed property guru. I have learnt to play along, so usually I reply with property. I follow it up with, do you want to know why? It's because you can borrow money against your existing home, called leverage. For example, let's say you can buy a rental property by putting down a $100,000 deposit and leveraging the rest against your home. You buy a $1 million property. After 1 year, the $1 million property has gone up to $1.1 million. That's a 10% gain on the property, but a 100% gain on your initial $100,000 investment. What happens if the property drops to $900,000 over a year? That's a 10% loss on your property and a 100% loss on your initial investment of $100,000. If you invested $1 million into a share portfolio, in either of the examples given, your gain or loss would be limited to 10%. In both cases, you only lose when you sell. So it is better if you can hold the investment. As you can see, leverage magnifies both the gain or the loss. The more you leverage your investment, the more you can win or lose. There are some situations which mean you may have to sell. However, if you have leveraged your property and your costs, your interest, becomes more than the rent you are receiving, you may be forced to sell for cash flow reasons. You can't hit pause on accumulating interest. Investing is about risk and return. The greater the potential risk, the greater the potential return. The more you leverage your investment, the more risk you take. I wanted to bookmark this point in time, March 2023. Why? When I run through the above risks with clients, especially those that have already made their mind up and are just seeking validation, their response is quite often, things are different this time. The reasons why a particular market ends up in a negative situation are always different. History tells us that it happens and will likely happen again. That's normal. Always going up is not normal. So what should you focus on? Your goals. What do I need to give me the options I desire in retirement? You may not need to leverage your property. If you do, you can put a plan in place for how you get through a time like this that will typically involve investing across different assets like cash and shares. Thank you.